amongst bank runs, bank defaults, and all the crap that just happened in the financial system, who actually profits from it? You got it. The buyers of homes. Yes, next. We are excited today. We saw the bond market just dump everywhere in the last 48 hours. Very exciting times at the moment. We're going to go over that, a couple other articles today, and we're going to see where rates are at and where the bond market's at today on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage markets. Now, before we jump into this, guys, if you're a buyer and you're out there looking for a home actively, or you just want to know the process, go below here and get my buyer's guide. It's free, costs nothing. Let's get that guide. All you have to do is hit the link, enter your email address, and then simply it will email you the buyer's guide. If you're a seller, same exact thing. Let's do that. Let's go get a seller's guide. Again, it's free, doesn't cost you anything. We have a 100% off sale today. Take advantage of that sale. All right, so let's jump into the very first one. It says mortgage rates tumble in wake of bank failures. Yes, it's the government came in, stepped in, said that they were going to make the depositors whole, but all the investors, they were going to let them fry. And that's exactly what Janet Yellen had said yesterday. Now, things I didn't like what Janet Yellen said yesterday. She said, oh, the FDIC has plenty of money, but plenty of money to cover the $250,000 limit on personal accounts and some business accounts. But when it's all said and done, we've had 3 bank failures in the last 5 days. And so there's a lot of money being out there. And on top of that, if the Treasury is going to come in and then make everybody whole, well, what about all the stockholders that turned around and had insider trading as they knew that this was going down? The unfortunate people that got stuck here, yeah, but all the executives there sold, three of the top executives all sold a major amount of stock right before this happened there at Silicon Valley Bank. It is BS, and they should be punished. It's time to go to jail. If you're going to fumble away people's money and you're going to mismanage it and you're going to hire people that are not even clueless of what they're doing, and this whole thing, House of Cards, falls down, guys, it's time to go to jail. Don't give them $1 million buyouts like they did in 2008. The whole Lehman thing was just a joke. Here, who wants $1 million? Okay, who wants $1 million? Yeah, you're failing. Who wants $1 million? The bank failed. You know, the financial institutions failed. So what is the good part about this? Yes, interest rates falling. Let's go look at the 10-year bond. The 10-year bond, here it is. This is a 30 days. As you saw it, we kind of went up. We started going up, and this was you're seeing right here in March, and then all of a sudden, early March, and then splat. That's today, right? We just hit this. We just saw the last 2 or 3 days. It all just fall right here. So what does that mean? We're looking at, a couple of my lenders said that we went down 90 basis points. So as we were right at that 7% or a little over 7, now we're back in the low 6s today, as well as if you shop around a conventional loan, you're definitely in the 5s. Guys, I'd be all over that. You know, especially if you're an escrow, you need to go, you should have a professional loan or a loan officer, and they should have called you the first thing in the morning and said, hey, rates are going down, let's hold off, let's hit the brakes. This is very, very important. We see rates falling significantly. That is definitely the fallout of all of this. All right, so CNBC, something broke, but the Fed is still expected to go through with rate hikes. All of a sudden now we're getting a little more dovish feel out of the Fed. Before there was about an 80% chance of a 50 basis point hike. Now there's about a 25% chance there is no hike, and a 75% chance it's a 25 basis point hike. Just something that was on track. With that, you have a little bit of celebration out there. People are really excited that there might be a Fed pivot. CPI numbers come out tomorrow. I don't think they're going to be under 6 personally. I mean, all I know is if you're here in Southern California, you've seen gas prices going up. You see utility prices such as the natural gas or heating prices gone so far up. There's no way. If we go under 6% CPI, it's a CPI lie. There's no question. I've seen it all over Twitter, how much heating has gone up through the United States, and then people are complaining now about gas prices going up. That should fuel, the CPI to at least be where it's at, 6.4, if not a little higher. That's what we're seeing out there. The job losses are not there. There's no significant job losses. People are spending money. They have to spend money. And something we haven't even talked about, how many people are coming over the border and buying things? I mean, it's just dumb to even think about, that, oh yeah, we're trying to make Americans not buy stuff, but we're allowing 2 million people to come in the country every year, and they're not buying anything? Come on, it's ignorance to think that. Jay Powell should be looking at everything going on. He should say 3% in this environment, and 3.5% in this environment should be good enough, not 2%. 2%, you're going to have almost all bank failures across the board. Across the board. You're going to have the bond market sitting at 5.5% and 6% on the 1-year and 2-year bonds. And all the banks that put these 10, 15-year bonds, that they took people's money at 1 or 2%, and when they pull them out, they're going to have to pay money over and over. So either way, Fed broke something, and they broke it back in 2021 when they kept rates low and they printed $9 trillion. That's what they broke, and now it's collateral damage for the last 14 months. Let's go on to what's next here. ADUs. I know everyone out there is like ADU crazy right now. Well, California and the West Coast are ADU crazy right now. Everybody's looking for a lot big enough to put an ADU on it, and then go ahead and start building and looking at it. Now, I think for most people, it's more of a fantasy, or it's just a more talking point, a storytelling point, but the amount it costs to do ADUs, you have to find a good crew out there, a good contractor, and there's not very many, I'm telling you now. And the ones that are out there that are good are charging big money. But you can think about this, especially if you can put your money to a side and wait until we see a little bit of a downturn and those contractors need work, then you're going to get the best of the best out there, and you're going to get better pricing. Right now, you're paying top dollar for ADUs, being installed. The price of lumber has now gone back, starting to go back up. Materials are going up. We already know that labor is it's skyrocketing, going up. The builders might start building. Now they see that interest rates going down. They might bring some people back, which then makes the labor market in the construction sector, it just brings in more people, it brings in more jobs. Obviously, it doesn't help the Fed, but it helps, it hurts the affordability of even building ADUs. So I'd hold on. I might get plans together, as long as the plans are good for, a year or 2 years out at this moment. But save your pennies, because ADUs are definitely the thing of the future. We're just not in the environment at the moment to build a ton of them. All right, guys, and let's go look at what happened on Friday. So we've seen that it began, that little contagion that I showed you earlier on the 10-year yield. It went down significantly on Friday. We're going to see again on Monday. They went even further. So 30-year conforming went down 11 basis points to 6.69. We saw a 15-year go down 22, but jumbo fell 13, and then we saw FHA just didn't really make that big of a splash. It went down about 6 basis points. I think today we'll see it dramatically go down 1/4 to 1/2 point. So I think across the board, you're gonna see a 1/4 to 1/2 point less. We're at the low 6s, if not in the high 5s. This should spur on more people buying homes. I mean, we see enough people out there buying homes right now. We're seeing, especially here in Southern California, again, I told you, Orange County last week went back up to close to their all-time high. Again, this week, $1 million. $1 million is the average price, a medium home price in Orange County. And so that, again, shows that those 7 digits is that the market is strong and the values of homes are steady. Doesn't matter what media says, they don't know what they're talking about. I keep saying it over and over. You have to look at inventories to sales, and then that comes up with the medium home prices. Medium home prices all went up throughout the 4 counties here in Southern California, all the way across the board. Well, guys, thank you very much for joining us today. If you have any comments, please leave them below. Otherwise, let's continue to grow this channel. Hit that subscribe button. I appreciate it. You guys take care, and I will see you tomorrow.